Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
So if you woke up this morning and, checked the charts, you saw exactly why we dropped everything to bring you this deep dive.
Oh, absolutely.
The market has it's absolutely pumped in the last 24 hours, catching pretty much everyone by surprise, from day traders to the long-term HO dealers.
It was definitely a shock of magnitude, but the immediate catalyst is right there in the traditional economic data.
Right.
We saw those moderate inflation figures released yesterday, and that news cycle just immediately provided the kindling for this massive surge.
So our mission today is to cut through all that noise and connect those dots for you. We're going to go straight from the official inflation data. That's from the Bureau of Labor Statistics, the BLS, to that huge crypto movement. But we're not stopping there.
No.
We're also checking in on some core infrastructure upgrades, like the new release from the Binance BNB Chain. And then we're going to pivot.
A big pivot, yeah.
To how regions like Dubai and Saudi Arabia are not just watching the future of AI and blockchain, but are, actively defending against it and investing in it.
It's a really spectacular convergence. You're seeing these huge macroeconomic forces dictating short-term price. But at the same time, the foundational infrastructure and major international capital are making these huge aggressive shifts, totally regardless of the charts.
Okay, let's unpack this then. We have to start with the ignition key for all of this, that moderate inflation report. It just set the entire tone.
It absolutely did. So if we look at the official BLS data, U.S. consumer prices rose just 0.3% for December 2025.
Okay.
And only 2.7% over the past year. And that sounds modest, but the devil, as always, is in the details.
It always is.
Food and shelter costs, they continue to increase, and energy rose a little bit. But those increases were offset by some pretty sharp declines in areas like used car costs and communication services.
And crucially, what did the core CPI look like? You know, the number that excludes the really volatile stuff like food and energy.
So that core number rose just 0.2% in December and 2.6% over the year.
So pretty steady.
Very steady. And that moderate, steady trend is the key piece of information here. Remember, leading up to this, a lot of economists were, sounding the alarm.
Right, about tariffs and things like that.
Exactly, that tariffs would accelerate inflation. According to this data, that just hasn't materialized yet.
Okay, so if the inflation number is moderate and it doesn't look like it's spiraling out of control, why did the crypto market react so violently? What was the aha moment for investors?
Well, the market read that moderate CPI number as proof. Proof that the Federal Reserve has less reason to panic.
Okay, less reason to be aggressive.
Less reason to aggressively hike interest rates or, keep them high for longer. And this easing of the aggressive Fed risk makes risk assets, and that absolutely includes Bitcoin and Ethereum, suddenly look much safer.
And more attractive as an inflation hedge.
Exactly. More attractive compared to traditional bonds in that environment.
And the response was just definitive. We saw huge ETF inflows. I'm seeing a total of $121.84 million.
A huge number. And the global crypto market cap just surged. It climbed 4.7% in 24 hours to hit $3.34 trillion.
Wow.
And those price surges were just as stark. Bitcoin flew from, below $92,000 to touch $95,285.
And Ethereum saw an even bigger jump percentage-wise.
It did. It spiked to $3,323, which is a 7.22% jump. It just goes to show that when traditional finance gets comfortable, digital assets are the immediate beneficiary of that liquidity.
Speaking of liquidity, none of this price action really matters if the rails underneath it all are weak. So let's check in on the overall health of the decentralized ecosystem.
That's a great point, because even with a massive pump like this, you need to know the underlying structure is sound.
Exactly.
And if we look at those foundational metrics, total value locked or TVL.
The total value in smart contracts.
Right. It has really picked up pace. It's now sitting at $126.59 billion. And digital asset treasury inflows are robust at $4.68 billion.
Okay, so the system is healthy?
Very. What's interesting, though, is that while DX dominance is growing, it's still holding just below that 40% threshold. It's currently at 36.74%.
And within that DEX volume, there's a serious power struggle happening at the top. Uniswap is leading with $1.98 billion in 24-hour volume, but Pump is following incredibly close behind at $1.78 billion.
With PancakeSwap rounding out the top three at $1.14 billion.
So that's a lot of concentration.
It is. That concentration liquidity in just those top three suggests that even during a huge market pump, new entrants are finding it really tough to challenge the established order.
So traders are sticking to the platforms they trust, the ones with deep liquidity.
Precisely. And supporting all of this, of course, is the stablecoin layer, which is just locked in place. Tether's 24-hour volume is staggering, over $103 billion.
Wow.
It just cements its status as the foundational liquidity backbone, dwarfing its closest competitor, Circle's USDC, which is sitting at around a $75 billion market cap.
And Bitcoin still has its gravitational pull, right? Dominance is still over 57%.
It is, but the real story, I think, in the top assets might actually be Ethereum.
Okay, what's happening there?
Its dominance has marginally picked up to 12.01%. But that little move was enough to push it across that very significant $400 billion market cap threshold.
That feels like a clear indicator of renewed institutional confidence, maybe, in the scalability and utility of the number two asset.
I think it signals a rotation back into the blue chips. But, regardless of this daily price volatility, the networks themselves just continue to iterate and upgrade.
Right. So let's talk about infrastructure. Binance BNB Chain just announced its third major upgrade. They're calling it Fermi.
And it's worth noting the BNB Chain market cap is now at $130 billion.
Which is huge.
It's actually overtaken Ripple's market capitalization. That's a huge structural event in and of itself.
And that structural shift is being fueled by some serious technical aggression. The Fermi upgrade targets pure speed and reliability. It's aimed at increasing block production by a massive 40%. But what really matters to you, the user, is that it reduces transaction finality to about 1 second.
And that 1 second finality is what high-frequency traders and power users absolutely need.
How does it work?
Well, improved validator coordination and faster transaction execution just means the network consensus happens faster. So you, the user, aren't left waiting several seconds for a block confirmation.
So it dramatically reduces risks, like slippage, especially in a market that just surged so violently.
Exactly. It's an aggressive play for dominance in that high-speed transaction arena.
Speaking of strategic moves that prioritize real-world utility over, just pure speculation,
Yes.
Polygon Labs has made a pretty significant acquisition focused entirely on the regulated payment space.
This is a very, very deliberate move towards building a legitimate regulated payment platform right in the U.S.,
They're branding it their open money stack.
which shows the focus is really shifting to adoption.
So to build that stack, they went out and acquired 2 key pieces. First, CoinMe.
Right. And CoinMe immediately brings licensed fiat on and off ramps and a massive physical network of 50,000 retail locations.
That physical accessibility is crucial.
It is. And second, they acquired Sequence, which adds the smart wallet capabilities and the cross-chain payment tools.
So what's the end goal here?
The goal, which they say they'll detail further in Q2, is to offer regulated stablecoin payments to individuals, to businesses, to enterprises all across the U.S.
It's just more proof that the serious players are focusing on institutional adoption and real utility, not just speculative trading.
Absolutely.
But before we go global, we have to pause and address a bit of a cautionary tale. Something that hit the headlines closer to home. The utter failure of the NYC token, the one once associated with former New York Mayor Eric Adams.
Unfortunately, yes. This turned into a massive crash and an absolutely vital lesson in liquidity management and the immense fragility of public trust.
Can you detail the failure for us? I mean, the token suffered a cataclysmic crash, falling over 81% from a $600 million peak.
All the way down to around $110 million market cap. It's an enormous drop that just wiped out nearly $500 million in value.
And what triggered it?
The panic was triggered by highly suspicious liquidity movements. A wallet connected to the token deployer was found removing $2.43 million in USDC.
Okay.
Now, $1.5 million was later added back amid these claims of, quote, liquidity adjustments, but roughly $932,000 remains unaccounted for.
If that missing amount is relatively small, I mean, in the context of a $600 million project, why did the market panic so severely? Was it more about the intent than the raw dollar amount?
Absolutely. The panic wasn't about the dollar amount. It was about the fundamental violation of trust.
Right.
When a wallet tied to the original deployer removes liquidity right after a launch, it just signals an immediate rug pull risk. Even if they claim they have good intentions, the optics are terrible.
And the market reacted accordingly.
Immediately.
And now the political context is crystal clear. The current mayor, Mamani, has publicly stated that he does not own and has no plans to buy any cryptocurrency.
Including Adams's former token.
Right. It's a clean break from that whole civic crypto experiment.
It just highlights the extreme risk when tokens are associated with government names without, ironclad decentralized controls and auditing. The bar for transparency is infinitely higher when public figures are involved.
And that concept of trust brings us to our first major international focus. Security and fraud in Dubai.
Yes.
The Dubai police have issued a very serious security warning, urging vigilance against AI-fueled document forgery scams.
This is so critical because it really represents the sharp edge of advanced digital crime. Fraudsters are now using AI to create highly realistic fake documents.
We're not talking about sloppy Photoshop here.
No, not at all. We're talking mimicking official templates, signatures, stamps perfectly. This is advanced synthetic fraud, and it's directly linked to major financial crime.
They specified several red flags that authorities are telling the public to watch out for. Things like incorrect details, inconsistent information, fake signatures.
Right, things that look real but don't quite match official templates.
But the problem is, as the tech improves, how do you verify authenticity when your eyes can no longer trust what they see?
And that raises probably the most important question of the decade. How do you fight synthetic AI forgery? The immediate mathematical answer is blockchain.
Okay.
Blockchain tech offers a clear, multi-layered solution framework because it replaces visual trust with verifiable proof.
So give us the breakdown of that framework. How specifically does it defeat the AI forger?
It really comes down to 5 core strengths. First, an immutable document registry.
Okay.
Official documents are hashed and stored on-chain, meaning they cannot be altered or backdated without immediate detection. Second, instant authenticity verification.
So the police, banks, even the public, they don't have to look at the document's appearance anymore.
Exactly. They verify it via a unique blockchain hash or a QR code in seconds.
That makes the document itself a single verifiable source of truth. It removes the risk of circulating, multiple fake versions through email or as printouts.
Precisely. Thirdly, it provides tamper-proof timestamps for creation and modification data, all cryptographically locked down. Fourthly, smart contracts for issuance ensure only authorized government entities can issue or update the documents.
Preventing unauthorized creation.
Right. And finally, an audit trail locks down every single access or update, which is just invaluable for fraud investigation and for court evidence.
And for those committing the fraud, the UAE is not messing around. Forging official documents can lead to imprisonment for up to 10 years.
It highlights the severity of the offense and the immediate need for these kinds of ironclad digital defenses. They are shifting verification from looking real to mathematically provable authenticity out of pure necessity.
And our second international focus takes us just next door to Saudi Arabia. They're taking a much more proactive stance on the investment side of new tech.
That's right. They're going beyond defense and moving straight into offense.
How so?
Red Sea Global, or RSG, the developer behind those huge tourism mega projects like the Red Sea and Amala.
I know them.
They've partnered with Bunat Ventures to launch a brand new Saudi-focused AI venture fund. This is a very significant strategic move.
And what are the objectives of this fund? I see it focuses on startups that are either AI native or use AI as a core part of their business model.
And critically, their aim isn't just to passively fund companies. They plan to back around 25 pre-seed and growth stage startups over the next 3 years.
And they're providing them with a living lab environment?
Yes. Founders can pilot their solutions directly with RSG's active tourism projects, testing their technologies in real-world, high-stakes environments.
So they're turning some of the world's largest, newest tourism developments into giant proving grounds for startups. That partnership marks a really crucial shift from RSG simply using innovation to actively incubating it.
It shows the leadership there views innovation as the catalyst for economic diversification, for attracting global talent, and for accelerating the national digital transformation goals they outlined in Vision 2030.
They're essentially buying the talent and the technology that they know will shape their future economy.
Exactly.
We have covered a lot of ground today. From the BLS office driving the price action, all the way to the Arabian Peninsula driving these huge strategic shifts. The two big takeaways for you, the listener, are this. First, macroeconomic news still holds immense, immediate power over crypto prices. It drives that short-term momentum. Second, the underlying infrastructure, like the Binance Fermi upgrade and that ambitious Polygon acquisition, and the regional development initiatives, like the Saudi AI Fund, they all continue aggressively, regardless of any daily price fluctuations.
That really is the crux of it. We saw massive liquidity moving because of moderate CPI data. Yet at the same time, we learned about the fragility of trust when advanced AI is used for fraud in Dubai.
Right.
And the solution to that, they realized, wasn't just more regulation, but the immediate mathematical proof that blockchain offers.
So what does this all mean? While moderate inflation led to a massive pump today, the biggest long-term move might not be in the price of any single token, but in the shift of jurisdiction and focus.
I think you're right.
The UAE is aggressively using blockchain to combat advanced AI crime out of pure necessity, and Saudi Arabia is investing heavily in AI incubation through venture capital out of pure ambition. So does the next great wave of verifiable, secure digital innovation originate outside of the traditional tech hubs, driven by this potent mix of necessity and ambition. That's something to keep exploring.
Indeed. It's fascinating to watch these new global poles emerge.
Until next time, keep digging deeper,